Hello and welcome to everyone in the virtual classroom to learn fun flow statement. Today in this sixth video lecture, let us take one more practical question having some new points. See the balance sheet. Data has been given as usual for a period of 2 years for March 17 and then March 18. And we have to prepare a fund flow statement for the current year, that is 2018. Before I show you the additional information, let me draw your attention for the item of current assets and current liabilities that we have to use for the preparation of working capital schedule. You know, over here only one block has been given for current assets and current liabilities. Likewise, on the liability side, last item, current liabilities. So, working capital schedule preparation would be very easy. It can be done within 2 to 3 minutes. Let us say it how working capital schedule has been prepared over here. Current assets, as I show you in the balance sheet, gross block, only one item. Same is for current liabilities, gross block, total amount, total of A, total of B, working capital A minus B. That gives the final answer. Increases in working capital 71,250. It can be confirmed over here. In the last column also, changes in working capital, which also indicates the final answer 71,250. Let us report this figure of increases in working capital in the fund flow statement. Increases in working capital indicates application of fund 71,250. So over here, a block of current asset and current liability was given. So working capital schedule was relatively very simple to prepare. After this working capital schedule, let us verify the additional information. Number of items have been given from 1 to 6. Let us verify these items one by one and record the transaction on the basis of given additional information. Item number 1, a piece of land costing rupees 30,000 was sold at 30% profit, and the profit on sale was credited to capital reserve account. Let us prepare a working note as usual. First working note for the sale of land. Have a look. Cost of land as given in additional information, it was 30,000 rupees. Profit at the rate of 30%. 30% of rupees 30,000, 9,000. That gives the selling price rupees 39,000. Journal entry number 1. Bank account debited 39,000 to land and building account credited 39,000. So we credited the full selling price with profit. Second point, for the transfer of profit, as instruction given in the question that profit was credited to capital reserve account. So second journal entry, land and building account debited rupees 9,000. 2. Capital reserve account credited 9,000 rupees. Give the posting impact in the concerned ledger accounts, land and building, as well as capital reserve account. Opening balance 2,20,000, closing balance 2,70,000. Posting of first journal entry, bank debit to land and building account credited 39,000. And then transfer of profit, second journal entry, land and building account debited to capital reserve account credited, transfer of profit. Over here, capital reserve account, opening balance 2,000, then the posting impact, transfer of profit, land and building, transfer of profit 9,000, closing balance given in the balance sheet 20,000. This was the posting. Let us close these two ledger account. There are no other transactions given for these two ledger accounts, so you can close it and find out the balancing figure if any. Come on the land and building account, credit side looks bigger, total 3,09,000, put it on the debit side and we are getting a balancing figure of rupees 80,000 on the debit side. Apply the common accounting knowledge, common accounting sense. This must be the purchases made during the year and the journal entry that would have been passed to record it. Land and building account debited to bank account credited. 80,000. Account is over. Likewise, close the capital reserve account also. Total of debit side looks bigger, 20,000. Put it on the credit side, 20,000. And we are getting a balancing figure, rupees 9,000 on the credit side. What it could be? It must be the transfer from the current year's profit and loss account. Like company transfers to general reserve account, every year for the purpose of saving that we saw in our previous 3 questions. Over here, company has transferred rupees 9,000 to capital reserve account because there is no other transaction given related with capital reserve account. So this must be the transfer from the current year's profit and loss account debited to capital reserve account credited. Account is over. Fund flow impact. Come on the land and building account. Title came bank 39,000, indicates sources of fund, receipt of fund will be reported in the fund flow statement on the sources side. Title came bank over here. For this 80,000 indicates the purchases, means application of fund. So these two items, one receipt, another payment, will be reported in the fund flow statement on sources and application side respectively. While profit has been transferred to capital reserve, that is why it doesn't affect our process of fund flow. So forget it. While in capital reserve account, over here this 9,000 balancing figure having a narration of profit and loss account. Title came profit and loss. So you have to be careful about this transaction, Wherever the title is profit and loss, you need to think it about from the viewpoint of adjusted profit and loss account. To test, does it look like a cash transaction? Does it look like an operating transaction? No, this one is a non-cash transaction. Merely amount has been transferred from profit and loss account to capital reserve account. It's a non-cash item and that is why it should be added back in the current year's profit once again to arrive for fund cash profit generated from business operation only. So this 9,000 would be reported in the adjusted profit and loss account on the left hand side plus side. Let us report these two transactions, 2 in the fund flow statement and 1 in adjusted profit and loss account. See, purchases of land and building 80,000 and sale of land 39,000. So one application, that is purchases, another sale, that is sources of fund. Now adjusted profit and loss account, as I told you, as I explained you, transfer to capital reserve 9,000 on the left hand side, plus side. Second point of additional information, let us verify it. Point number 2. During the year, vehicles of rupees 45,000 were purchased and no sale of it was made. Let us prepare a working note as usual for this particular transaction. A simple transaction has been given for the vehicle, and that is why there is no need of any working note, because a simple purchase has been given. So let us post it directly in the vehicles account. This is the vehicles account. Opening balance 33,000, closing balance 69,000. And now this transaction, for which, as I told you, there is no need of any working note. It can be posted directly in the ledger account. So vehicles account debited to bank account credited, purchase is 45,000 as given in additional information point number 2. Instruction was very clear that no sale was made during the year. Close the account. Debit side looks bigger, 78,000. Put it on the credit side, 78,000. That gives a balancing figure of rupees 9,000 on the credit side. Instruction itself was very clear that there was no sale made during the year. So this must be the current year's depreciation. You know, vehicle is a fixed asset. So some amount of depreciation was supposed to return off during the current year. So 9,000 is nothing but the current year's depreciation, for which the journal entry that would have been passed is profit and loss account debit 9,000 to vehicles account credited 9,000 depreciation of the year. Fund flow impact. Purchases having a narration bank 45,000. Application of fund flow statement. While depreciation, you know it very well, always a non-cash item, and being a non-cash item, this would be added back in the current year's adjusted profit and loss account by reporting it on the left hand side. Let us do it. First of all, purchases of vehicles, application of fund 45,000. While depreciation on the vehicle, adjusted profit and loss account, depreciation on vehicles 9,000 rupees. So this was transaction number 2 related with vehicles. Third point, a machine costing rupees 40,000. See the word costing, original cost, on which the accumulated depreciation was rupees 12,000, was sold for rupees 80,000. You know, in the balance sheet, let us verify the balance sheet. Machinery has been given on the asset side, second item, and simultaneously on the liability side, second last item, depreciation fund on machinery. It means company is following depreciation fund system for this fixed assets, namely machinery. So a working note is required for this particular point. So let us prepare a working note for this transaction of machinery. Working note number 2. Have a look. Sale of machinery. Depreciation fund system has been given in the question. You have to remember it. Though in our previous questions also depreciation fund system was given. So you know the characteristics of this system very well. There is no need to repeat it once again. Cost of machinery sold given in the additional information rupees 40,000 less accumulated depreciation so far rupees 12,000 given in the point. That gives the written down value in the current year rupees 28,000. Selling price 18,000. That gives the loss rupees 10,000. That took place in the current year due to sale of this machine. Let us record this transaction by passing the journal entry. First J, bank account debited 18,000. Transfer of depreciation from depreciation fund account to machinery account. So depreciation fund account debited rupees 12,000. Profit and loss account debited, loss 10,000. To machinery account credited its original cost price rupees 40,000. Let us record this journal entry in the concerned ledger account of machinery and depreciation fund account and find out the balancing figure from this two ledger account. Have a look. Machinery account. Opening balance 80,000. Closing balance 1,50,000. Posting of the journal entry that we passed bank account debited 18,000, depreciation fund account debited 12,000, profit and loss account debited 10,000, that is for loss. 2. Machinery account credited 40,000, the total of these three, its original cost. While depreciation fund account debited for transfer of depreciation, let us post it in the depreciation fund account. Depreciation fund account debited 12,000 transfer of depreciation. Opening balance in this account given in the balance sheet 20,000. Closing balance 30,000. Total of debit side 42,000. Put it on the credit side 42,000. And we are getting a balancing figure of rupees 22,000 on the credit side. This must be the current year's depreciation on the machinery. Under the depreciation fund system, always depreciation of the year credited to the depreciation fund account. So being a non-cash item, depreciation is always a non-cash item. This 22,000 would be added back in the adjusted profit and loss account on the left hand side or the plus side. Let us verify the machinery account from the viewpoint of fund flow statement impact. Title came. First of all, close the account. Total of credit side looks bigger, 1,90,000. Put it on the debit side, 1,90,000. And we are getting a balancing figure of rupees 1,10,000 on the debit side. This must be the purchases made during the year. Journal entry that would have been passed bank came in the transaction. So machinery account debited to bank account credited 1,10,000. Now fund flow statement impact. Title bank purchases application of fund. You know it very well. On the credit side, once again title bank 18,000 sale of machine sources of fund. So these two bank will affect the fund flow. One as an application, another as a source. While this is the 12,000 transfer of depreciation from depreciation fund account does not affect the fund flow process. But this 10,000 having a narration of profit and loss, the loss due to sale of machinery, it's a non-cash item. We saw it earlier also in our previous questions. So being a non-cash item as well as being a non-operating item, this 10,000 will be added back in the current year's profit once again. So we will report it on the left hand side of adjusted profit and loss account. So from machinery account, 3 items, 2 in the fund flow and 1 in profit and loss account, that is loss 10,000. And from depreciation fund account, current year's depreciation, as we discussed earlier, being a non-cash item, will be added back in the current year's profit once again. So total 2 items in the fund flow statement and 2 in the adjusted profit and loss account. Let us report it. Purchases of machinery 1,10,000, while sale of machinery 18,000. These 2 items in the fund flow statement related with machinery. Now 2 items in the adjusted profit and loss account due to this machinery transaction. Loss on sale of machinery 10,000 and then depreciation on machinery 22,000. So 2 transactions in FFS and 2 transactions in adjusted profit and loss account related with machinery transaction. After machinery, let us verify another point from additional information. Point number 4. A routine item. This item was there in all the 3 previous questions, but over here something is also new for the first time that you are going to deal with this income tax item. Tax liability for 2016-17 was settled at rupees 35,000 and it was paid. And the excess provision was transferred to profit and loss account. So last year 2016-17, whatever the provision was made, out of which rupees 35,000 has been paid in the current year. And the excess provision, whatever it was, that has been transferred to profit and loss account is said in this particular point. So let us prepare a working note for this item, income tax provision. Last year, tax provision, that is the opening balance, was rupees 40,000. You may verify it in the balance sheet, or else just at the time of posting we will verify the opening balance. So last year closing balance was 40,000, which is an opening balance for the current year 40,000. This was made in the last year and now it was settled and rupees 35,000 was paid. So excess provision of last year, how much? It is 5,000. 40,000 minus 35,000, that gives the excess provision of last year 5,000 and it was transferred to profit and loss account. तो जहां से लिया था पास्ट में वहीं को वापस लौटा रहे हैं. 2016-7 में ये से प्रॉफिट एंड लॉस में से लिया था 40,000, out of which 35,000 has been paid and the excess has been returned to the same profit and loss account. Let us record the journal entry. Income tax provision account debited 35,000 to bank account credited 35,000 for the payment that has been paid in the current year. Excess provision, as we discussed, rupees 5,000. तो जहां से लिया था इनको ही लौटा दे रहे हैं. Income tax provision account debited 5,000 to profit and loss account credited 5,000 excess provision written back to profit and loss account. And the current year's provision, whatever it is, you will get it in the form of balancing figure 52,000. Let us see the income tax provision account for the purpose of posting as well as for the purpose of closing balance also. Income tax provision account. Have a look. Opening balance 40,000. Posting of the journal entry. Income tax provision account debit 35,000. Excess provision written back transferred to profit and loss account. So provision for tax debit to profit and loss account credit. Closing balance given in the balance sheet 52,000. ये इस साल का आपने प्रोविजन बना के छोड़ा है प्रॉफिट एंड लॉस में से. मेक द टोटल ऑफ डेबिट साइड 92,000. Put it on the credit side and you will get the same balancing figure 52,000, which has been given in the form of closing balance for the current year, because company wants to maintain a closing balance of rupees 52,000 in the form of income tax provision for the current year. So this 52,000 is nothing but the current year's provision, profit and loss account debit to income tax provision account credit current year's provision. Account is over. Fund flow statement impact. Nothing is new. Bank indicates application of fund, tax paid, fund flow statement, application side. Title came profit and loss account, current year's provision. It's a non-cash item, so will be reported in the adjusted profit and loss account on the left hand side, plus side. Over here title came profit and loss for this transfer of excess provision 5,000. So company has credited this 5,000 to the profit and loss account of the current year. But what is the nature of this transaction? Apply the two tests. Does it look like a cash transaction? Does it look like an operating transaction? First test, does it look like a cash transaction? No. Merely it has been a transfer. So being a non-cash item, this would also be reported in the adjusted profit and loss account. Reverse impact. कंपनी ने प्रॉफिट एंड लॉस अकाउंट में क्रेडिट करके इस साल के प्रॉफिट को बढ़ाया है, तो हम रिवर्स मीन्स प्रॉफिट को कम कर देंगे. एंड यू नो हाउ टू रिड्यूस द प्रॉफिट बाय रिपोर्टिंग दिस 5,000 on the right hand side on the minus side of profit and loss account. So 52,000 on the plus side, 5,000 on the minus side. These two entry, these two items, these two amounts will be reported in the adjusted profit and loss, while this 35,000 as a payment will be reported in the fund flow statement on the application side. Let us report it. First of all, fund flow statement, application of fund, income tax paid 35,000. Now adjusted profit and loss account, as I explained you, current year's provision for tax 52,000 on the left hand side on the plus side, while on the minus side excess income tax provision 5,000. So this was for income tax provision, point number 4 of the question. Let us verify the additional information once again for next point of the question. Point number 5. Equity share dividend for 2016-17 was paid in the year 17-18 at the rate of 18%. At the rate of 18%. For 16-17, this has been paid in the current year 17-18. And during the new year, equity shares were issued at 10% premium. So two transactions have been given in one item. Let us consider first one related with dividend for the last year paid in the current year. Have a look in the balance sheet. Equity share capital 1617. Balance is 2 lakhs and dividend has been paid for the last year 1617 on this balance of rupees 2 lakh at the rate of 18%. So let us prepare a working note for the equity dividend. First journal entry. Working note number 3. Equity share dividend. 18% of 2 lakh, that is 36,000. Profit and loss appropriation account debit 36,000 to equity dividend account credited 36,000. You know, profit is a distribution, appropriation of profit. तो पहले profit and loss appropriation में से आपको लेना है and then afterwards payment. So second journal entry, equity dividend account debited to bank account credited 36,000. Let us give the posting impact in the concerned ledger account for this journal entry. Equity dividend account. Have a look. Over here there is no opening or closing balance because this dividend declared and paid in the current year. So it is not like that proposed dividend account having opening and closing balance. No, it is a dividend declared and paid in the current year. So posting. First journal entry. Profit and loss appropriation account debit to equity share dividend account credit 36,000 current year's dividend. Then payment. Equity share dividend account debit to bank account credit account is over. Fund flow statement impact. Title came profit and loss. In the first journal entry, it was a non-cash item. It was a non-operating item, and that is why this 36,000 will be added back in the current year's profit once again by reporting it on the left hand side of adjusted profit and loss account. While this 36,000 as a payment will be reported in the fund flow statement on the application side. Let us do it. Fund flow statement first. Application of fund. Payment is 36,000. So come on the application side. Equity dividend paid 36,000. Then adjusted profit and loss account. As I told you in the very first journal entry, profit and loss appropriation debit to equity dividend credit. In that first journal entry, it was a non-cash, non-operating transaction. So we are adding back in the current year's profit by reporting it on the left hand side of this adjusted profit and loss account. So this was for the equity dividend declared and paid in the current year, but for the last year's equity share capital. Now the second point that has been given in the same fifth point. During the year, new equity shares were issued at 10% premium. So if we check the balance sheet, equity share capital, very first item 2 lakhs and then 4 lakhs. So there is a big difference, a difference of rupees 2 lakh. So one may assume that this must be due to new equity issue made in the current year. But wait, be careful. Before you apply your assumption for the equity share capital issue, let us verify point number 6. Something is there in this point number 6 which is also affecting your equity share capital account balance. So before you decide the amount of new equity issue, do verify point number 6, apply it, and then think about the new equity issue amount. Here it is a very good point that has been given in point number 6, which is related with this point number 5 in the context of new equity issue amount. So let us verify point number 6. On 1st April 2017, it was decided to redeem preference shares at 15% premium. The final call on these shares was made. It means here preference share capital, whatever it is given in the balance, it must be a partly paid up share capital, and that is why the final call instruction has been given. Let us verify the balance sheet even though. Have a look on the second item on the liability side. Yes, preference share capital of rupees 10 each, rupees 8 paid up. Yeah, it is a partly paid up share capital. Opening balance 80,000, closing balance 4,000. You know the provisions of the Companies Act. Partly paid up shares cannot be redeemed by the company. Only fully paid up shares can be redeemed by the company. So, before the process of redemption of this preference share capital, company demanded the final call on this preference share capital, and the instruction is also there. The final call on these shares was made. All the amount of call money except on 500 shares were received fully. So, on 500 shares, company did not get the call money. On 30th April 2017, the preference shares were redeemed and the raised reserve. See the word raised reserve. Something is very good over here. Once again I am reading. On 30th April 2017, the preference shares were redeemed and the raised reserve. इसका मतलब ये हुआ कि कंपनी ने यहाँ रिजर्व रेज करके ये रिडम्पशन वाला ऑप्शन सिलेक्ट किया है. You know, two options can be utilized for the purpose of redemption of nominal capital of RPS. Let me remind you, either by using the distributable profits, which is otherwise available for the purpose of dividend also, and the second option by from the proceeds of the issue made for the purpose of redemption. So here company has utilized the first option from distributable profits, which is otherwise available for the dividend. और जब इनका यूज करना होता है तो आपको पता है कि उतनी ही अमाउंट से आपको CRR कैपिटल रिडेम्पशन रिजर्व बनाना पड़ता है. And over here the words that have been used is raised reserve. So it is very clear, though hidden, that company has utilized the first option, company has utilized the profit option, and that is why reserve was created and was utilized for issuing bonus shares to equity shareholders. You know, capital redemption reserve can be utilized only for one purpose as per Companies Act provision, that is for the issuance of bonus shares to equity shareholders. So over here RPS point is a very good point. ये रिजर्व कितना बनाया, फिर बोनस कितना दिया इक्विटी शेयर को, ये पता लगाओगे, बाद में ही आपको पता चलेगा ये फिफ्थ पॉइंट वाला कि कितना इक्विटी इश्यू इस साल में किया है. So first you have to deal with this sixth point related with RPS redemption, creation of reserve, that is CRR, and then CRR was utilized for issuing bonus shares to equity shareholders. Once you complete all these formalities, then afterwards only you can arrive over here for the determination that how much equity issue has been made in the current year with 10% premium. So be careful. Let us prepare a detailed working note for this RPS related transaction. and see how it has been done over here. Working note number 4, redemption of preference share capital. As we saw in the balance sheet, opening balance was 80,000, preference share capital of rupees 10 each and rupees 8 paid up. So preference shares are partly paid up. Opening balance 80,000, face value 10, 8 paid up. So number of shares can be decided by 80,000 divided by 8, 10,000 preference shares, on which, as per instruction, final call was demanded of rupees 2. So rupees 2 call would have been demanded. As per instruction, call was received except on 500 shares. It means call money received on 9,500 shares only, not on the 10,000 shares. So how much call money would have been received by the company? So call money received on 9,500 shares into 2, 19,000. And company can redeem only 9,500 shares because partly paid up shares cannot be redeemed as per Companies Act provision. Only fully paid up shares can be redeemed. Over here, after receiving a call of rupees 2 on this 9,500 shares, 9,500 shares have become fully paid up. So only 9,500 shares can be and would be redeemed by the company. It means partly paid up shares 500, on which paid up amount per share is rupees 8, because call money of rupees 2 was not received. So 500 into 8, rupees 4,000 will remain as a closing balance in preference share capital account at the end of the year. This has been given in the balance sheet also. Closing balance of the current year is appearing 4,000. It is for this 500 shares on which rupees 8 paid up, because they didn't make the payment of call money of rupees 2. So 500 shares into 8, 4,000 is appearing as a closing balance for preference share capital account. This 4,000 belongs to this 500 shares. We will verify it in our preference share capital account also. So this is the basic working notes for the call money, for the number of shares that can be and would be redeemed by the company, and how much shares cannot be and would not be redeemed by the company. So this must be very clear in your mind, because it is a very good point of this question. Let us prepare a planning for the redemption. As per our discussion in the last slide, amount of redemption of preference shares 9,500 into 10, 95,000. With 15% premium, this has been redeemed. So total amount required, nominal amount 95,000. Redemption premium at the rate of 15%, 15% of 95,000, 14,250. That gives total amount 1,09,250. Planning of redemption. As per our above calculation, total amount required 1,09,250. Let us give a bifurcation. Nominal amount of RPS 95,000 and redemption premium on RPS 14,250. As per instruction given in that point number 6, raised reserve. You know the word that I already explained you. The raised reserve. Preference shares were redeemed and the raised reserve was utilized for issuing bonus shares to equity shareholders. तो कंपनी ने रेज्ड रिजर्व मीन सीआरआर बनाया था, क्योंकि सीआरआर का एक ही उपयोग अलाउड है कंपनीज एक्ट में बोनस देने के लिए। तो कंपनी ने सीआरआर बनाया था, मतलब कंपनी ने एक्यूमुलेटेड एट्रीब्यूटेबल प्रॉफिट्स का ऑप्शन सिलेक्ट किया था, so from general reserve this amount would have been taken, and if that is the option that was selected by the company, you know, same nominal amount equivalent with that of RPS redemption amount 95,000 must be transferred to CRR account. तो ये 95,000 से कंपनी ने CRR बनाया था, जिनका उपयोग बाद में इक्विटी शेयर होल्डर्स को बोनस देने में कंपनी ने किया है. Second, portions redemption premium on RPS 14,250. In the balance sheet, share premium has been given, opening balance 3,750, but we need 14,250. In point number 5, it has been said during the year new equity shares were issued at 10% premium. So due to this new issue, you are going to receive some share premium also. Later on, we are going to verify it also. But that amount is 10,500 from new issue. So 10,500 and opening balance 3,750. Total became 14,250 available in the share premium account, and we need exactly 14,250. So this RPS redemption premium will be met from share premium account. Once the planning is ready, you can pass the journal entries for the redemption of preference share capital one by one. Let us do it. First journal entry for the call money. Bank account debited 19,000, 9,500 shares into rupees 2 call money. So bank debit to preference share capital account credit 19,000. Second, preference share capital account debited 95,000, that is for 9,500 shares, which became fully paid up after the receipt of call money. So 9,500 shares into rupees 10, 95,000. Redemption premium on preference share capital account debited 14,250. How it came? 15% of 95,000. To preference shareholders account credited 1,09,250. Then for the creation of reserve, third journal entry, general reserve account debited 95,000 to CRR account credited 95,000, and this has been later on utilized to give the bonus to equity shareholders over here. Fourth journal entry, for the payment, preference shareholders account debited 1,09,250 to bank account credited 1,09,250. Fifth journal entry, but this should be passed after deciding the issue of equity share with premium, क्योंकि वहां आपको प्रीमियम मिलने वाला है 10%. In the last working note, we will verify how much premium received due to new issue. But even though this is the last journal entry, share premium account debited to redemption premium on RPS account credited 14,250. Once the process is over, as instruction given in the question, that raised reserve was utilized for issuing bonus shares to equity shareholders. So let us pass those two journal entries also. CRR account debited 95,000 to bonus on equity shareholders account credited 95,000. And second, bonus on equity shareholders account debited to equity share capital account credited 95,000. And that is why there is no closing balance of CRR appearing in the balance sheet. Why? Because that balance of rupees 95,000 has been utilized for issuing bonus shares to equity shareholders. So, these were the transactions. Now posting. ये बोनस पोस्टिंग करेंगे, बाद में ही पता चलेगा कि इस साल कितना इक्विटी इश्यू किया है विथ 10% प्रीमियम. So posting impact one by one. Let us give it in the concerned ledger account. Preference share capital. There are so many ledger accounts for this RPS related process. See, opening balance 80,000 given in the balance sheet. 10,000 shares, 8 paid up. Have a look. This is very important. 10,000, 8 paid up. This is the closing balance 4,000 as I explained you at the time of discussion of working note. 500 shares. They didn't give the call money, and that is why it remains in the form of closing balance. 500 shares, paid up amount 8, 4,000. So 10,000 minus 500, only 9,500 shares have paid up the call money. And that is why the posting of the first journal entry, bank debit to preference share capital account credit 19,000 call money received. Second journal entry, the resolution for the redemption. Preference share capital account debited 95,000. Redemption premium on RPS account debited 14,250 to preference shareholders account credited 1,09,250. Opposite narration, opposite amount 1,09,250. So this was for the resolution passed in the board meeting. Then on the basis of that chart that we prepared for the planning of redemption, कंपनी ने CRR वाला ऑप्शन सिलेक्ट किया था. सो थर्ड जर्नल एंट्री, जनरल रिजर्व अकाउंट डेबिटेड टू CRR अकाउंट क्रेडिटेड. सी जनरल रिजर्व डेबिट 95 टू CRR account credited 95,000. Over here, no opening balance, no closing balance. So third journal entry for creation of CRR, GR debit to CRR credit. Then fourth journal entry. Let us verify for the purpose of payment. Preference shareholders account debited to bank account credited 1,09,250. Account got over. Then redemption premium on RPS. In this share premium account, opening balance 3,750 given in the balance sheet, no closing balance. But due to issue, company received premium of 10,500. We are going to verify it after 2 minutes in the equity share capital account with a working note. Just wait. But this is the amount 10,500 received in the form of share premium due to new issue. So total 14,250, 14,250. And this 14,250 has been utilized to write off redemption premium on RPS, for which we wrote the journal entry, share premium account debited to redemption premium on RPS credited. Share premium account is over. Redemption premium on RPS account is also over. So 4 ledger accounts got over. General reserve, close it. It was also related with this process. Total of debit side 2,15,000. Put it on the credit side 2,15,000, and we are getting a balancing figure of 95,000. This must be the current year's transfer from profit and loss appropriation account to GR account. CRR account 95,000 was there, and this raised reserve was utilized for issuing bonus शेयर्स टू इक्विटी शेयर होल्डर्स, जिसके लिए हमने 2 जर्नल एंट्री लिखी थी. इनका पोस्टिंग करें. CRR अकाउंट डेबिट टू बोनस ऑन इक्विटी शेयर होल्डर्स अकाउंट क्रेडिट, बोनस ऑन इक्विटी शेयर होल्डर्स अकाउंट डेबिट टू इक्विटी शेयर कैपिटल अकाउंट क्रेडिट 95,000. पोस्टिंग of bonus from CRR to equity share capital account. So CRR account is also over. So total 6 ledger accounts got over due to RPS process. Let us consider from the viewpoint of fund flow statement impact all these 6 ledger accounts one by one. Preference share capital account first. Opening balance, then call money received 19,000. Word bank. You know it very well. Sources of fund in the fund flow statement 19,000. Debit side nothing is there. So from this account 19,000 sources of fund. Redemption premium nothing is there, neither the word bank nor the profit and loss. Over here, yes, premium has been received in the current year, but first of all we will decide the equity issue amount and then we will go for this premium amount also. So wait for that. In the last step, in the last working note, we will deal with this share premium amount. Preference shareholders account having a word bank payment 1,09,250. As a payment, it indicates the application of fund flow statement. So 19,000 as a source of fund, 1,09,250 as an application of fund. Two items in the fund flow statement. The remaining two ledger accounts. General reserve. As I told you earlier, current year's transfer being a non-cash item, 95,000 will be added back in the adjusted profit and loss account on the left hand side plus side. While CRR account, nothing is there. Creation of reserve, 95,000. Then utilized for issuing bonus shares. Bonus always being given free, so doesn't affect the fund flow process, 95,000. So two items in the fund flow statement and one item GR, adjusted profit and loss account. So 6 ledger accounts go over and 3 items will affect the fund flow process. Let us report it. First of all, fund flow statement, 2 items, call money and payment to shareholders. Have a look. Sources side. Call on RPS received 19,000, while on the application side, redemption of RPS with premium 1,09,215. Two items in the fund flow statement and one in adjusted profit and loss account. On the left hand side, on the plus side, transfer to general reserve 95,000. So 3 effect we gave in the fund flow process, 2 in the fund flow statement, 1 in adjusted profit and loss account. Now come on the fifth point. Let me show that fifth point once again. क्या था वो? Second part of the fifth point. This one. Fifth point, dividend हमने consider कर लिया, but this is during the year new equity shares were issued at 10% premium. अब ये तय करना है, मगर पहले CRR बोनस के रूप में हमने लिख लिया and now we can decide that item of new equity issue. तो कितना इश्यू किया है? Last working note for issue of equity shares. Have a look. Amount of issue, equity issue has not been given. So after bonus issue from CRR, balancing figure of credit side of this account means equity share capital account. Whatever it is, that would be the new issue made during the year. So let us verify the equity share capital account to decide the balancing figure after bonus given from CRR. Equity share capital account. This is the equity share capital account. Have a look. opening balance 2 lakh, closing balance 4 lakh, 95,000 in the form of bonus given from CRR, total of debit side 4 lakhs, put it on the credit side 4 lakhs, that gives a balancing figure on the credit side 1,05,000. This is the amount of issue made in the current year. As instruction given in fifth point, second part of that fifth point, during the year, new equity shares were issued at 10% premium. तो पहले ये बोनस वाला पॉइंट हमने कंसीडर किया रिलेटेड विथ आरपीएस प्रोसेस, सीआरआर डेबिट टू बोनस on equity shareholders, bonus on equity shareholders to equity share capital. And now we are in a position to decide the balancing figure on the credit side of this account, which must be the new equity issue amount that has been made in the current year. And it is 1,05,000. So the last journal entry to record this transaction, let me show the last journal working note once again. This is the last working note. So balancing figure on credit side of this account, which is 1,05,000, as I show you in the equity share capital account, which must be the issue amount made during the year with 10% premium. Now you can decide the share premium account that has been received on this issue. So total amount, bank account debited 1,15,500 with premium. To equity share capital account credited 1,05,000. To share premium account credited 10,500. That is 10% of issue amount, and issue amount was 1,05,000, 10% of which is 10,500. So by this way, we decided the fresh issue amount made in the current year, and 10% premium is 10,500. So this is a good point of this question. First of all, you have to complete the RPS process, use the raised reserve for the purpose of bonus to equity shareholders, then come on the equity share capital account and decide the balancing figure, which would be the fresh issue made during the year 1,05,000, and on the base of this amount, share premium amount would be 10,500. Posting bank account debited to equity share capital account credited 1,05,000 to शेयर प्रीमियम. देखिए अब आप शेयर प्रीमियम अकाउंट पर आएंगे. मैंने आपको पहले भी कहा था कि हम इनको बाद में देखेंगे कि ये कैसे 10,500 मिले. So now this 10,500 you can understand it very easily. Bank account debited to equity share capital account credited 1,05,000 to share premium account credited 10,500. FFS impact. Total amount received due to this issue 1,05,000 plus premium 10,500. So we got total 1,15,500 as a sources of fund in the fund flow statement. Issue of equity share capital with premium 1,15,500. So this was in the context of new equity share issue with 10% premium. Point number 5. Second component of the point number 5 that we completed in the last leg. After taking point number 6 of RPS, we completed the process of RPS first. We decided the bonus given to equity shareholders. Then we came on equity share capital ledger account. Then we decided the balancing figure. We got the amount of equity issue amount on the base of which 10% premium we got the share premium amount. I hope it would be very clear in your mind. Let us verify additional information once again. Now nothing is left. All points of additional information over. Let us verify the balance sheet for the remaining items of the question. Land and building already over, machinery over, patents. You know, something is there. Intangible assets 62,000, closing balance 50,000. It means during the year, company has written off 12,000 worth of patents by applying the concept of amortization. Profit and loss account debit 12,000 to patents account credited 12,000. But it's a non-cash item, and that is why, being a non-cash item, it would be added back in the current year's profit once again. So let us add back this 12,000 on the left hand side, patents written off 12,000. Once again, balance sheet verification. After patents, vehicle already over, current assets over, underwriting commission 15,000 versus 10,000. Same impact like we applied in the patents. A fictitious asset, deferred revenue expenditure, the nature of underwriting commission. Fictitious assets or deferred revenue expenditure. 5,000 has been written off in the current year's profit and loss account. Being a non-cash item, add back it once again in the current year's profit. So left hand side plus side, underwriting commission written off rupees 5,000. These are the balances: profit and loss appropriation account, balance of current year as a closing balance 1,10,000, and opening balance of last year 16,000. Once again, balance sheet verification. Come on the liability side. We completed the asset side. Let us verify the liability side. Equity share capital over, preference share capital over, general reserve over, profit and loss balance over, share premium, opening balance only, we already discussed it, also with ledger account over, capital reserve over, it was related with land account transaction, taxation provision over, depreciation fund machinery over, current liabilities item of working capital schedule over. So now two accounts we have to close. First of all, let us close the adjusted profit and loss account and find out the balancing figure. See, all the items are over. Here also, total of left hand side 3,60,000. Put it on the right hand side minus side. That gives a balancing figure of rupees 2,95,000. This is the fund profit, cash profit received from the business operation in the current year. As the sources of fund, this would be reported in the fund flow statement. So let us report it in the fund flow statement as the sources of fund. Last item on the sources side, fund from business operation, operating profit 2,95,000. And now make the total of this fund flow statement 4,86,500, 4,86,500. It gets confirmed, it gets verified. So it's a very good question. Points, some new points were given in the question. Though RPS, we already did some question related with RPS in our previous video lectures, but over here it was given with a partly paid up share capital. So a call money was there. Simultaneously, some hidden instruction was given for raised reserve, which affects the equity share capital account. And that is why it was also a very good point of this question. And that is why today this question took more than 1 hour and approximately 20 minutes to complete the question. It indicates the importance of this particular question, because a detailed depth discussion was necessary for point number 6 RPS and then for point number 5 for issue of new equity shares with 10% premium. I hope these 2 points would be very clear in your mind. If necessary, you may re-listen this video lecture once again to understand, to digest those 2 points, especially point number 6 RPS redemption and point number 5 in the context of new equity issue made with 10% premium. So if necessary, do watch, do listen this video once again to digest those 2 points 6 and 5. Thank you very much.